Well, howdy there, folks. I was absolutely shocked when I logged on YouTube today and I saw this headline. Jim Cramer explains why he's shorting Nvidia stock now. Holy smokes, this ain't no joke, because I was like, wow, okay, let's get into this one, okay? So we're going to react to that. I want to give my opinion on that, which is going to be interesting, okay? Then we're going to react to this video after that, which is essentially everybody's kind of wondering. It's been a horrible year, obviously, in 2022 for the stock market. Everybody's wondering, like, when's the bottom, man? Like, when's this game finally over, okay? And so we're going to hear what Oppenheimer has to say about that and kind of their perspective on that whole, let's call it, game there. Hope you guys enjoy this. As always, thank you for everybody that's being here. We're well over 12,000 subscribers now at this point. I think we're approaching 13,000. So thank you so much for everybody that subscribed to the channel. You're amazing. I appreciate all of you. And if you got any opinion on today's video, I'd love to hear what you have to say in the comment section. Let's get into this.
I'm concerned about Nvidia.
What's your concern about Nvidia, Jim?
What have you seen the way that Bitcoin is traded? They still have this, they're moving away. Ethereum's new merger means that you do not need graphics cards. That has been an unintended consequence for Nvidia. They make these great cards, and those people have been the people who've been mining have been using them. You do not need their cards anymore to mine. And at the same time, they haven't been able to make the transition yet to being artificial intelligence, virtual reality. We're just not there yet, machine learning. So we've got the high-tech stuff not there yet producing earnings, and we have the lower stuff being hurt by this Ethereum transfer. David, I don't know how much you follow Bitcoin, but Bitcoin seems to be another thing that the Fed is sick of.
Yeah, we're going to talk a bit more about that.
So first off, in all due respect to the Ethereum move there, it's been known for a long time. That is not some type of new material information. Anybody that pays attention to anything in the crypto community understands that. So, yeah, it just seems like no new material news there.
There was a lot.
You like that?
Yeah. I like what?
That the Fed's sick of Bitcoin.
I don't know what the Fed is sick of.
Just agree.
I did read a lot, Carl, this weekend about the merge, about the Ethereum merge.
Yes.
Got a lot of play. Of course, the theme seemed to be it's still not going to cure what's wrong with crypto, but it's obviously a good thing, certainly for energy use.
Yeah. Well, Jim, to your larger point, though, okay, Fed needs to drain more liquidity. Clearly, 3,900 was pretty pivotal on Friday. I think BTIG pointed out it's actually the level that's had the most volume over the last 3 years. Right. But I assume now you're talking about revisiting June lows, right? Which for the S&P is about 5.5% away.
Yes, for a lot of stocks. I think, well, look, if we got to get three breaks, we got to get the Chinese to get away from a COVID policy that is unnecessary. They have to take the Moderna. We have to have the Ukrainians drive out the Russians. And we have to have the Fed saying, okay, we know that 4% on a 2-year piece of paper is better than most stocks. So people are going to sell their stocks, take them down. And at that point, we bottom. And maybe it means it's in June, but I do think we bottom. I mean, I think that if we get any one of those three, Carl, we're going to regret that we sold, which is why you still have to stay the course. But you must be willing to take punishment. You have to, Carl. You can't just be out there and say, you know what? Buy, buy, buy. You have to say punishment and then buy.
Well, Carl, Jim, I mean, a cessation of the hostilities in Ukraine we'd be up on a lot of things very quickly.
Right.
You would not want to be short that day.
How can you sell?
I mean, not that it's going to happen, unfortunately. We can all hope it will, that there will be some unexpected reversal by Putin. But nonetheless, it is a risk if you're short.
I think it really is. I listened to President Biden last night on 60 Minutes. I mean, incredible hawk on Taiwan. I am, wow. But I don't think he's going to let Ukraine lose. Carl, that was a kind of a seminal interview. We had a president who basically said, Russia, look out. We had a president who said, China, you're nothing. This is very, very strong stuff. It tends to be walked back. But I do think that if I were Russia, I'd be thinking, you know what, maybe this was a big mistake. Maybe our leader is out of touch. If we get that, Carl, what are we going to... And we're short Nvidia, it's a loser.
Certainly, Kathy Wood's been doubling down, buying quite a bit last week.
Okay, so, you know, from my understanding, Cramer has been bullish on Nvidia for a long while. And so for him to all of a sudden be, you know, now that stock's down massively and be like, we're shorting it, it's a loser stock, these sorts of things. when that was a $300 stock roughly entering this year, and it's a $130 stock now. That's just that's interesting. And Jensen Huang, he's always talked very positively about him and how he's the creme de la creme when it comes to CEOs and all these sorts of things. Let's read through a few of these comments, real quick here. I mean, you can see you can see what the vibes are, right? It doesn't take a rocket scientist to kind of read through this and see, what's going on here. So, when it comes to Cramer, I used to watch Cramer back in the day. I got in the market 08, 09, and I'd watch Cramer. He was one of the only people that I would watch and kind of like understood a little bit back then. And it was interesting because by about late 2010, I stopped watching him. And the reason is as I got a little more educated on the markets and started taking things more and more serious and investing for myself and watching him more and more often, the thing I realized was he basically, if there's a stock that's doing great, he's all behind it. And if there's a stock that's getting tore up, he wants to short it and will talk trash about it and all these sorts of things. There's no conviction with Cramer. There's no conviction at all. There's no, oh yeah, this stock's down big, but it's going to be a huge winner over the coming year or so. I'm buying it now and you need to buy it now or anything like that. It's, it's just talk trash about stocks when they're down huge. And then when stocks go up huge, it's pile on. We're going to the moon and it's going to go up forever, essentially, right? And there was just something I didn't appreciate. But the truth around Jim Cramer is the way he thinks is actually the way most of Wall Street thinks. So if he frustrates you because he flip-flops all the time, there's no conviction there, he's it's going to the moon when the stock's at 52-week highs, and then it's a loser stock and we need to short it when it's at 52-week lows. If that frustrates you, most of Wall Street is going to frustrate you because that's what they do. They just kind of like trend ride, and whatever the trend is whatever they're hopping onto. And if that means short a stock, when it's hitting new 52-week low and it just keeps going down and buy puts, that's what they'll do. And if stocks just keep going up and up and up, then they're going to buy calls on it. They're going to buy it. That's the way a lot of Wall Street works. So if Jim Cramer frustrates you, most of what goes on Wall Street and most of the way these individuals think is going to frustrate you in a major way. So, it is what it is. The thing with kind of Cramer in that whole situation is, I always had trouble trying to figure out, is he an investor or a trader? Because a lot of times it can sound like he's an investor, right? And even some of those things he said right there where, you can't sell stocks. But then on the flip side, it's like there's a stock Nvidia you loved. It's down massive. Now you're calling it a loser stock and you're shorting it. So what is it? Are you a trader or are you an investor? It's very hard to tell with him. And without the conviction, it's just very frustrating. That's what turns off a lot of people, to be quite honest there. So, I hope I explained that well. The way he thinks is how most Wall Street thinks, and you just got to understand that, okay? Alrighty, guys, let's get in this next one here, Oppenheimer, and what their opinion is on when stocks will bottom here, if it's anytime soon.
500 didn't wait last week. It's coming off its worst week since June, and just about 2% above the recent low. But your next guest checked the charts and says we could retest that level soon, or maybe even head lower. Let's welcome in Ari Wald, Managing Director and Head of Technology Analysis at Oppenheimer. The bears are growling this show, Ari, and I want our viewers and listeners to know, don't at me on this. The Scott's been negative, and you seem like you're backing that view up with the technicals, and I want to make clear, we did not plan this. Not like some piling on here.
Right, we didn't plan this. And I think it's also important to distinguish time horizon here. We probably cite a little bit more positively longer term, being of the view that this is a final leg lower of this bear cycle. I think we're getting close, but not there yet. So I think the incremental change in recent weeks is just the rollover in these mega cap.
A less intense lower low is increasingly likely following rollovers in mega cap stocks. Stubbornly high long duration bond yields remain our top market concern. Okay, interesting.
Tech stocks that dominate the cap weighted indexes. We were previously of the higher low camp. We thought the S&P would come down into 3,800. That was a key level for us. And now with the rollover in mega caps, I think there is the possibility for a less intense test of the prior low, or even a lower low, The key point being is that the weakness in the mega caps is masking some internal improvement that we're seeing underneath the surface. And again, making the case that this could be the final leg lower and setting up a turn in the cycle in the fourth quarter when seasonals do improve.
Well, I think Scott actually did say, and I don't want to quote him, but he's sitting right here, that you were a little more optimistic in December, right? I mean, you thought in December we could see a turn higher for equities. You're negative between now and then.
Yeah, I think that, somewhere in here, October, when I put a date on it, is, the market will flush out, and that'll be a buying opportunity.
So does that sound, Ari, like it?
So what he just basically said there, this big gentleman, he basically just said there's going to be a flush out in October. That's what he thinks. Who knows? His guess is as good as anybody else's, but his opinion is there's going to be some sort of big sell-off in October, and that's when you're going to get big buying opportunity, which I already think there's a million buying opportunities, but if that comes, I will welcome that potential there as far as all that goes. But, a lot of these folks on Wall Street, I've noticed a lot of them are bearish on September, October, and maybe even into November a bit, but then turn positive kind of, late November into December, essentially, is what I'm hearing a lot of commentary from a lot of these Wall Street folks now at this point in time, which, maybe it becomes a self-fulfilling prophecy where if everybody's bearish right now, no one's buying. And then eventually, people start buying at the end of October into early November. The big question will be when when we're talking about late October into early November, that's in mass earnings season at that point in time. All the big techs are going to be reporting at the end of November into the beginning at the end of October, beginning of November. All the big banks, all the companies in general are all going to be reporting their earnings. So that will be just a very interesting time to get intel on, what's going on with the economy, what's going on with earnings.
Up with the technicals that you are seeing?
That follows the seasonal roadmap as well. Seasonals for us is secondary confirmation. We're not going to use them in isolation, but when our other indicators are confirming that, it does make for a compelling argument. For instance, breadth was deteriorating coming into the year, into what was the worst stretch of what the 4-year presidential cycle, the first half of the midterm year. That typically improves significantly in the fourth quarter. Midterm years typically bottom in mid-October. And again, with that improvement that we're seeing underneath the surface with the New York stock.
Yeah, so what he just explained there, that's historically, traditionally 100% true. Basically, the stock market usually performs amazing, basically kind of like November-ish, December-ish in a midterm year, essentially. Now, what do we know about midterms? It's likely... it's likely that Republicans are going to do very, very well come midterm, so at least from what I'm seeing. And so how will the market take it? I think the market will probably take that as a positive in that sort of situation. And, it's definitely a possibility of bullishness. But once again, we get back to what's going on with the earnings picture. Traditionally, the market does do great in November, December after the, midterm or around the midterm time. But if earnings are completely collapsing for companies, right, that would be a little bit of a headwind there, and it would be a shaky, rough November and December if that was the scenario, right? But that remains to be seen. If Apple comes in, reports pretty good numbers, doesn't have any end-of-the-world commentary, and same thing with Meta and Google, McDougal, and Amazon and all those big dogs, right, Microsoft, then what do you have to go off of that? At that point, it's like, okay, earnings aren't falling off a cliff, we already got a lot of pain here. Okay, let's get ready for 2023 and buy. And I think that's kind of the way Wall Street's thinking there. But earnings will matter in a significant way. And basically it starts about mid-October, actually. I think that's when the banks will report. Then gets into like the mids and the big techs late October into early November.
These advanced decline line in August, coming off its highest level since January, so far holding its 2Q lows. I think as long as that is still the case, you do.
Look at that. Last 8 midterm cycles. And look at the market. Jeez. The interesting thing is here, it's basically looks like it starts actually in mid-September, which is interesting there, right? S&P bottomed October 9th in a prior midterm year. So October 9th on average, but it almost looks like it's in September more there. So, and obviously this is 2022, which is somewhat of a similar kind of correlation there. Obviously this is kind of a freakish year and how bad it's been. But, if you're going to assume this is going to be similar, we bottom somewhere here and then start heading up. We'll see.
That's set up for a strong run into year end.
I was going to save this for an RBI, this thing I do in the mornings, Ari, but I'll do it now because I'm going to be off on Friday. Next week is historically the worst week of the year for the stock market. Next week. I mean, do you think there could be some kind of big flush coming?
There could be. The day-to-day, the week-to-week is always tricky. And when you have a poor trend and not being, the base build, building a base is difficult. And I guess this is not the time of year to expect that upturn just yet. So history would suggest, that volatility could linger here. I think it's important to understand your time horizon. That I guess I'm making the case that it could snap back pretty quickly a few weeks post that.
All right, Wall, Oppenheimer on the tape.
Yeah, many times the market gets way oversold in different scenarios, and also overbought on the other side. And usually if the market gets way oversold, you're going to have a pretty strong snapback on the other side. If the market gets way overbought at a particular time, you're going to have a pretty sharp move down. Next week, on average, is the worst week for the stock market. What do we have to go off of, to send the market down massively next week, which I would be all in favor of, by the way. But what do we have to go off of for that? Well, the Fed's already going to raise this week. Okay, so that's already going to be known. Inflation numbers already came out. We're not getting any big earnings. So it would almost be like irrational fear at that point because there's no news to go off of. So for the market to just sell off massively next week just because it's usually the worst week for the stock market in the entire year, what do you have to go off of? So that makes it a little bit of a weird scenario. But hey, if it happens, I'll be glad for it. I'm always ready to buy. I was buying today. I'm always ready to buy out there. So anyways, guys, hope you enjoyed today's video. I appreciate you joining me as always. If you're looking to join us in the private stock group, check out the pinned comment down there to get access to all the Discord chat, to get access to our weekly investor private group report, to get access to the different chats where you can chat with, fellow shareholders of Palantir, SoFi, Tesla, the Chef, all those sorts of stocks as well. And we even have an Nvidia chat, Hey, you never know. Okay. Much love as always and have a great day. You buying or you short Nvidia? Love to hear from you guys. Peace.